to this episode of ECCB Connects, a production of the Eastern Caribbean Central Bank designed to share with you who we are, what we do, and how we serve you. Small businesses are the backbone of our economies, but access to financing has not always been easy. We check in with CEO of the Eastern Caribbean Partial Credit Guarantee Corporation to explore how it is changing this reality, helping to turn business potential into real opportunity across the Eastern Caribbean. Stay with us. We'll be right back after the break.
Are you connected? Have you liked the ECCB Connects Facebook page and subscribed to the YouTube channel? It's quick and easy. Next time you go check in for the latest scoop on Facebook, just search for ECCB Connects and hit like. While you're at it, check us out on YouTube. Search for ECCB Connects and hit subscribe. And just like that, you're connected. But don't keep it all to yourself. Invite your relatives, friends, associates, and even your Facebook stalkers to get connected too. Hey, you're not on Facebook? No problem. Send us a WhatsApp message to 662-2561 and we'll connect you to our broadcast list. So come on, get connected.
Thanks for staying connected. The Eastern Caribbean Partial Credit Guarantee Corporation, or ECPCGC, was established to help small and medium-sized businesses gain access to financing, especially those that may not have enough collateral to secure a loan on their own. The Monetary Council of the ECCB approved the corporation in 2017 and it became operational in 2018. The ECPCGC works with 6 ECCB member countries and partners with financial institutions to support lending to MSMEs across the region. It is a pleasure to have CEO of the ECPCGC, Carmen Gomez-Trigg, join us on set to share insights and provide a progress report on the corporation. Carmen, Happy New Year and welcome back to ECCB Connects.
Thank you, Shanna. Great to be with you as usual.
Carmen, when we reflect on the ECPCGC and when it started in 2018, how would you describe that journey so far?
In one word, challenging. Challenging because I don't think we had a proper appreciation of the state of our MSMEs when we started in 2018. So it was a project, it was World Bank funded, ECCB played a pivotal role in coming together with the World Bank to form us. But I think that in maybe some of the appraisals that were done, we didn't have a clear picture of the level of informality of the MSMEs. And this impacted on the level of uptake of the program. We had to continually work, stop, assess, work, reassess, and so on, until we finally started to see some uptake in from December 2024 into 2025. That's when we really started to see the numbers pop, and we really felt as if we had really got into the nerve of the MSMEs.
Now, for persons who may be hearing about the ECPCGC for the very first time, can you explain simply how it works in a practical way?
We are an agency that provide a part of the collateral that is required for a business loan. And the stress is on business loan, it's not a personal loan. So the MSME or entrepreneur goes to the bank and wants to get a loan, but he or she does not have sufficient collateral. If they meet certain requirements, we can offer them 75% or 80% of the collateral. We offer that to the bank. So there's an agreement that we sign with every bank and we sign it on behalf. So there's a kind of a three-way agreement, the bank, the borrower, and ourselves, where we clinch this deal and they're able to get the loan even if they don't have all the collateral.
Now, Carmen, access to credit has always been a major challenge for MSMEs in our region. How do you think the ECPCGC has helped to change that landscape since it has been established?
If I can quote the figures from December 2025, we have done over 300 loans to a loan value of 30 million EC dollars across the 6 countries. And to me, that is an achievement because it means that people, some of whom would not normally have access loans at all because they didn't have the collateral or other requirements, they are now able to get funding to grow their businesses. And we've seen medium-sized businesses really grow and develop. We've had return clients. We've had people who said, okay, so this is a first loan. I want to pay it off now. I'll come back later for another loan and so on. So we have seen the progress on the ground. We've seen an impact in the value of the loans that we have approved for guarantees, and also in the jobs created, and also in the number of banks who have opened their doors to welcome the SMEs.
Wow, sounds good. Now you talk about the guarantees. Tell us about the different types of guarantees that have been designed to meet the small businesses where they are, and which ones have really taken off.
When we launched in 2020, we had one particular guarantee, which was designed for normal times and for larger businesses. But our target group, our niche group, was not as large as previously assumed. So that one did not take off. So that is what we call the classic guarantee, with a loan size. It started off with a loan size of 300,000 EC dollars. It's now 750,000 EC dollars. And the client must provide 75% collateral and also an equity injection. So this is really for larger businesses who have their documents in order, audited statements, and so on. When we found that that one wasn't working, COVID happened around the time that we were launched and just immediately after. So we went back to the drawing board. We came up with a working capital guarantee for people who had debts lingering during COVID. So we did a program, a short term, like a 5-year program, a 5-year loan where you can get up to $200,000 to pay some back taxes, to pay some salaries and so on. So that one took off. And then we did a startup guarantee, because some people who had been laid off now brought their side hustle as a mainstream hustle. So we did a startup guarantee, which has a limit of $100,000. These were going okay, but we still felt that we were missing the mark somehow. And in December 2024, we did a road show and we discovered that there was a lot more that we could do. So we opened up ourselves. We previously were not client facing. We changed our model and we said, okay, clients, come to us. You say you don't want to go to the banks. Let us talk to you first and see where you are and so on. And that helped us. So in 2025, late 2025, we introduced the growth guarantee, which was a really, really soft, very relaxed terms and so on. And that is the one that is taken off rapidly. So what it means is that the person can come without the 20% collateral that is required. They will build that up over the life of the loan in conjunction with the bank. They come even though they don't have all the documents, but they've been putting regular deposits into the bank. The bank can see how they can repay the loan. So that's the second point. The third point is that we increase the ASMA to increase the loan size by a certain amount so that they can get the accounting services, so that we can have a proper look at what's taking place under the hood. And that has worked for us. Right now, we're in the process of doing an audit on those growth guarantees to see where we are. And the final one, which is not really the final, but I'm saying final because it's only available in 3 countries, St. Kitts, St. Lucia, and St. Vincent, is a Taiwan women's growth guarantee. We started out a couple of years ago, but it hasn't really taken off because our women are very informal and they're not prepared. So we've done some amendments, and now that the World Bank has demitted the program, we are now able to go out and push this one fully, because it's a different sort of arrangement. So we are now going to be focusing on that one this year to get our women on board, and our business owners who employ majority women, we're going to get them on board with that particular program. So there are 5 products in our arsenal, basically.
Carmen, partnerships have been very important in the success of the ECPCGC, whether it's partnership with the commercial banks, credit unions, or the development banks. There was even a significant partnership with the World Bank. Tell us about these partnerships and their importance.
Okay, so the main partnership right now is the Eastern Caribbean Central Bank, because the idea was designed with the Eastern Caribbean Central Bank and the World Bank. The World Bank funded 5 of the countries to the tune of $2 million to put into our coffers, and 1 country came up with their own $2 million. So the funding was World Bank. The idea and the design was a collaboration between World Bank and ECCB. Now, when we were created, we had to go out and get our own stakeholders, get our own partnerships. We signed agreements with 21 financial institutions across the region. Banks, commercial banks, development banks, credit unions. And we are happy to say the credit unions have now come into the fold. They are doing business with us. They have not only signed on, but they are actually doing guarantees and so on. Those are the partnerships at the level of the supply of credit to the borrowers. We also have partnerships with national support organizations who will be working with a little bit more during the course of this year. And we have recently been approached by international organizations to design products for particular purposes, short-term purposes, and we'll be rolling those out later on this year. So partnerships and collaboration, those are our watchwords.
Now, many small business owners still feel intimidated by the lending process for whatever reason. What do you think remain like the biggest mindset or information gap?
The biggest mindset is that someone would steal my idea. Now, I want to tell our SMEs, we feel your pain. We identify. And because of this, we have asked people, if you don't feel like going to the bank, please reach out to us. We give them an info@ecpcgc.org, and we are able to talk to them firsthand to find out what they need, what they have, what they don't have, give them some advice on how they can bring themselves to a bankable status, because you have to be bankable to approach a bank to get a loan. So we continue to work. We will be continuing the virtual appointments. This year we put out an announcement when we're going to restart that, and we're going to work with our clients. But it has meant a significant shift for us from our original business model, where the banks and the financial institutions were our gatekeepers, to where we are our own gatekeepers at the moment.
And as we wrap up, if there is one message that you would like the small businesses across our region to take away from the ECPCGC and the work that the corporation has done, what would that be?
We understand your struggle. We are here to assist. Help us to help you build bigger and better. That's the message.
Great. Carmen, thank you very much for sharing with us these important insights and basically giving us a progress report on the important work of the ECPCGC in the efforts to help the small businesses across our region. And we wish you all the best going forward.
Thank you very much. Thank you so much.
And now for this week's financial tip.
As adults, let us also encourage our children to save and budget from an early age. Let us start now.
We have come to the end of this episode of ECCB Connects. We spoke with Chief Executive Officer of the Eastern Caribbean Partial Credit Guarantee Corporation, Carmen Gomez-Trigg. She provided an update on the work of the corporation in helping to support small and medium-sized businesses across the ECCU by helping them gain access to much-needed financing. If you or someone you know operate a small business in any of the 6 participating ECCB member countries and would like to learn more or gain tangible support under this initiative, kindly visit the corporation's website at www.ecpcgc.org. We will be back next week with another episode of ECCB Connects. Until then, stay connected.